Samir Kamath, who's the CFO of Pine Labs, joins us on the show. Samir, thank you so much for taking the time out and being with us. Good morning to you, Neeraj here.
Good morning, Neeraj. How are you?
No, I mean, all of us, in some sense, use your transaction modules, right? Every time we transact via credit card. So the name is very well known to us and to everybody. But I'd like to start off by talking about, if you can explain to us, how does this contract wherein the oil marketing companies have asked you to modernize their infrastructure work per se? What happens in this? What's the kind of work that comes to you? What's the nature and for how long could this be?
Yeah, Neeraj. So basically, see, Pine Labs is a company which has been around for almost 25 years. And we started our business actually working with oil marketing companies way back 20 years back. And our whole core is about solving complex needs through simple payment solutions through using technology. So coming specifically to this contract, if you see that oil marketing companies require three kinds of services. Energy automation at the petrol pumps and outlets so that the dispensation happens at the right rate, the fuel density, etc., is well calibrated and shown. The second area of focus is the actual payment solutions, which is there at each of the checkpoints. And third is they have a large amount of fleet operators which rely on fleet cards, and there's a whole management around that. I think as Pine Labs, we have been an aggregated provider for all of these services for some time. I think the latest contracts further deepens our presence in this space by getting almost access to about 130,000 devices across 60,000 outlets. What this means for us is these oil marketing companies actually transact close to about 25,000 crores of volume on a monthly basis, equally split between card and UPI. It makes us one of the largest players in this space to automate the billing solutions at the point of sale. That's 130,000 devices that we have got. It's a multi-year contract. Second, we're already working with them on the automation part. And lastly, we have got almost about 2 million cards, which is for the whole fleet management. So basically, a lot of fleet operators prefer this as a convenient mode of payment because it is convenient to them. Second, a lot of pilferage and leakages are prevented because of that. So these three contracts help us become a relevant and a very dominant player for some of these oil marketing companies.
Samir, just correct me, but weren't you already present at the point of sale for almost all of these guys any which way? So what's the newer element here?
So I think the energy automation, we were already there. We were already present across some of these, present almost about 40,000 point of sale machines. This is a much larger contract of 130,000, which further deepens it. Fleet management is a new contract that we have got. So I think that deepens across all the three spectrums. So we were there in energy automation. We were there at some level in the payment solutions, but this deepens it and makes us one of the largest players in that space.
So, maybe that's why. Okay, so am I right? And just to double click on that, and Samir, good morning to you, Alex here. Obviously, we're using the pumps mostly in...
Alex, I think your mic is gone.
Okay, no, I've got it back. So we're mostly dealing in Mumbai, right? So Neeraj and I. So we've come across your service more often here. Am I right in assuming that this will allow for better geographical spread and therefore this 130,000 is what is taking place now?
Yeah, I mean, typically oil marketing companies work on RFPs that get renewed, and therefore this is a multi-year contract. This is a national contract, so you'll typically find us at 130,000, actually now about 170,000 point of sale machines across the entire length and breadth of India, across the three oil marketing companies, IOCL, BPCL, and HPCL.
Estimation then, Samir, of what the implications of this, first of all, is it already rolled out? And second, what are the implications for revenue outlook? Is it materially changed on account of this?
It's an important contract for us from two perspectives. One, yes, we earn two kinds of revenue streams. One is on the point of sale, we earn rental income, and on transactions, we earn certain bps as well. We are at about 1.9 million touch points before this contract was awarded. So obviously, there is a further addition to that by this 130,000 devices coming in. I will not give the specifics of the numbers, but yes, it's an important contract for us, both from a revenue perspective and also deepening our positioning in this important cohort of business for us.
Samir, what does this, I mean, is this a large incremental contributor to what is already a very strong growth trajectory that you've recently been showing? I wouldn't say recently, frankly, all through, but since we're talking after the Q3 numbers, I'm using the term recency here. does this add meaningfully to the growth trajectory, or is this a small incremental addition to?
It is meaningful because it's a very large contract. I think last
Could you
quarter we have
quantify?
will not give the specifics of the contract given that's not in public domain, so I would like to keep it like that. But let me tell you one thing that we have grown at about 25% on a sequential quarter basis, on a year-on-year basis, that is for Q3. And within that, the digital payments business, which is large part of where this contract would sit in, has grown at about 16%. This will help us grow at a higher pace on that part of the business as well. And I think we have been guiding that we have grown at about 20 to 25%. All of these contracts help us sustainably grow because these are not just one-time contracts, but recurring revenue that comes through our P&L. So yes, it is a significant contract, both from a top-line perspective and from a long-term positioning in that space.
Street estimates, and I'm looking at brokerage notes here to help me out, Samir, that are pegging a revenue compounded annual growth rate of 20 to 23% between 26 and 28 financial year. You've talked about 20 to 25%, and you're saying this based on the latest edition as well. Is it not going to be better than that? Because the notes that I'm talking about are actually before you've announced this.
Yeah, no, I think all of this contribute to that growth, Alex. If you see where our growth comes from, it comes from both the domestic market and international market. International market, we have grown at about 35%. So Pine Labs is not just present in India, but also international business. So all of these contracts will go towards a sustainable 20 to 25% growth. I think we want to be conservative in our guidance in that sense, because honestly, we believe in delivering and kind of taking it forward. So I think we are very comfortable with the growth outlook that we're giving now.
Ask about your deployment of artificial intelligence as well, not just because it is a buzzword, Samir, but because it seems like you are doing actual work on implementing artificial intelligence. So can you help us understand what the productivity gains could mean for your financials? Do we see, for example, as early as the fourth quarter, an improvement in margin trajectory? How would that look like in FY27?
So let me, Alex, explain this in two perspectives. One is how we're using AI internally. And second, what does this OpenAI contract mean in terms of a top line and in terms of what we can do in terms of potential use cases in the future? As far as our own margin trajectory on a cost to income ratio and growth is concerned, we've been consistently showing improvement in our margins. Our adjusted EBITDA margins 3 years back used to be about 9%. We have projected at about 21%. So on a top line growth of about 24%, our adjusted EBITDA has grown at about 60%. That largely comes from productivity gains that are coming by AI deployment within. We have about 1,000 engineers. About 25% of our codes today are written on AI, and we can see that only going up. So we have guided that we will not add more engineers. We will see more productivity throughput happening through these engineers. And I think that's a big lever for us in driving the operating leverage of our business. We continue to use that across multiple in terms of the way we do our internal servicing to our customers, the way we do our reconciliations, the way we write our codes. So clearly that is already in play, and that's reflected in the trajectory of our performance that you've seen over the last few quarters. Coming to the open...
Yeah, sorry. No, please finish your point. So sorry to interrupt you.
No, so coming to the second part of AI, which is used more on the top line. So last week, we announced our partnership with OpenAI, one of the first in the payment space. I think it's a very interesting tie-up that we have. Look, ChatGPT has about 10 crore users in India, which makes it the second largest market for OpenAI, and probably predicted to be the largest market in the next year or so, which opens up a very interesting opportunities for commerce. So we've seen commerce becoming convenient. We've seen commerce becoming fast. I think it's time for us to make commerce intelligent. What I mean by that is today, when we look at, say, the Google ChatGPT LLMs, Claude LLMs, they're typically a question-answer format, which is the base level AI, which is there. Imagine tomorrow if you could embed intelligence, which means a person who's shopping up, say, for example, a mobile phone. He's not just looking for choices, but he can put in his considerations, he can put in his budget, he can put in his preferences, and the agent within the AI LLM model actually finds the best offer for him, negotiates the best offer, and not only that, he can make a transaction on the LLM model itself. I think that's the world we are building for. Our prototype is already ready, and we're planning to go live very soon with these opportunities. It opens out a completely new channel beyond the offline and online. This is a new agentic model that opens out for us.
Samir, hi, Tamanna here. Sorry, I'm just getting into this conversation, but I was listening to that. So what does that product become? Because all of these choices to customers will be provided by a whole host of other aggregators as well. It'll be provided by the Amazons, Flipkarts of the world as well. So what is Pine Labs doing in this space?
So very simple, Tamanna. I think what we do is there is something known as system of records. You basically have your whole inventory across all the merchants. We work with almost about 1 million merchants, and we have the full product catalog of all of these merchants. So today, if you see, even the large enterprises sell online, they sell offline, and probably now the LLM engines becomes the third model or third channel for them to sell, because this is assisted purchase. What we do is we have our APIs tied up with the LLMs of, say, ChatGPT or OpenAI in this case. All of the inventory of these vendors are now posted on the LLM models. And that becomes a new channel and market for them to have their customers buy their products. So it actually increases the ability to commerce for all of the existing merchants. We have already live with our prototype, and I believe this is an exciting opportunity. The entire integration of this is what we plan to do as a part of us Pine Labs.
What is the revenue opportunity for Pine Labs?
I think this is early for me to give. I think this will adopt. I think it's in the beta phase right now, so I will not give a guidance on that right now. But I think this is a new channel, and we've already got requests from multiple AI agencies and also from other merchants to kind of take it live. So I think any adoption of this will only kind of help us grow at a rate faster than what we have been guiding.
Timeline for this implementation? When you
I think our prototype is already ready, Tamanna. I think now it's about taking it further and taking it to the market. So somewhere through the year, you'll see some of these coming. You'll actually probably see this happening in live market.
Okay. Samir, so effectively, you are making the layer, but you already have a pipe to all of these customers, and therefore it becomes easy for you to do the outreach. It won't be a terminal model, right? It'll be an AI layer embedded in a software, if you will, by API.
I mean, imagine, Neeraj, so just imagine you're opening your chat GPT. I mean, earlier you used to search in Google. Now you can search on LLM. It is not just search. It's not just assisted search. You can even transact and close. So what we'll do is the payment layer and the catalogs of the products and the merchants will be now embedded within the LLM. So now you don't have to go beyond the LLM to do the end-to-end transaction. That's where the agentic commerce comes in.
Got it. Okay. Samir, embedded to this whole conversation that we are having is a takeaway from what's happened last night, wherein the former CEO of X, Jack Dorsey, has said that they are laying off an X number of 4,000 employees odd because of efficiency gains due to AI. Do you reckon firms like yours could grow at a particular pace and go ahead and lay people off? Would you, for example, calendar year 26 could see layoffs from your firm because AI is helping you increase productivity any which ways?
So, Neeraj, if you see already for last quarter, if you see our people cost, it's only grown at about 4%, whereas our top line has grown by 24%. So some of those productivity gains coming through AI is already started kicking in. As I said, 20-25% of our code is already getting done through this. I think we have guided in our earnings call as well that we have about 1,000 engineers, and we will not be adding any more engineers for the growth that we are guiding forward. I think the first step of productivity gains for us is we are a very workflow use case driven business. I think getting all the mundane routine work, etc., done through AI is the first level of adoption of AI. And I think that's already happening. And I think engineers can now be used for multiple use cases with system designs, controls, etc. And I think that's where the first step is. We're already seeing productivity gains. And I think that productivity gain will continue to happen through the quarter as well.
Ask you, Samir, about you, and you made a mention. By the way, the stock reacted when you did make that mention, when you said that 25% of your code is already being written by artificial intelligence. You see it going up, but where do you see that going, and to what extent do you see your code and your service being refined by human beings, but essentially driven by artificial intelligence?
I think our internal target is to keep moving it up. I mean, at least at about 30-40% to start with. And I think our internal focus on making it more and more live. In fact, we're running projects across functions. It's no longer just about a tech department. I think every function within Pine Labs is looking at how AI can be adopted. It's a big theme for us. And getting more done from less is a clear objective of the firm for FY27 and 26.
Okay, just on that specific question, Samir, do you see job cuts in the offing? I know you're saying you're hiring fewer engineers, your growth was only 4%. Is that in the realm of possibility? Because I think it's a top of mind question, it's a fair one to ask right now. Are you seeing AI tools replacing tasks being done currently by people in your system?
So two things here, Tamanna. I think one thing we have to keep in mind is while India, we are growing at 20%, international markets, we're growing at about 35, 40%. So what we can do currently is we have guided that we are not going to add any more engineers, but there are a lot of use cases. We have had some large wins across geographies. For example, we just won a new deal in Dubai with Bank. We are working closely with Emirates NBD in Dubai. We have had some large wins with Philippines, Gcash. I think these are deals where we are actually taking the prowess of India. India is a large, complex market, and we are winning at scale in India. We are using our skill sets in India to build our businesses in some of these geographies. That's why almost about 300 crores for the 9 months ended 26. Our revenues did come from international markets. I think a lot of our people incrementally can be used for penetrating these geographies. Had our growth not been there, we would have looked at it. I think there's enough for us to do. So I think we can easily redeploy and build those markets without having to add any headcount. And that's the operating leverage that we're really gunning for.
But my question is not on adding headcount, Samir. If I may reiterate, it's on reducing headcount. Are you saying that there is no scope for that or no requirement for that? Or is that something you will have to go back and look?
We will look at it opportunistically, Tamanna. I will look at it opportunistically. I think as a firm, we will obviously try to keep our headcount as optimal as possible. I think it's too early for me to say yes or no. I think AI is still in the adoption phase, as I said.
Yeah.
But definitely as a firm, we are very conscious about cost. As we have guided, you've seen our operating cost for the last few years. So whatever needs to be done to optimally manage the cost, whether it's in terms of improving productivity or to make it optimal, I think as a firm, we are more than happy. And that's what we have already demonstrated through our quarterly results. So I think that's what the street should take as a guidance, that we will see operating leverage come in through multiple things that we're doing.
All right, fair enough. Just want to close out the conversation, Samir, asking about a correlated question to what we began which was the tie-up with the OMCs. This is a pretty large tie-up and a large order. Are you in the market currently negotiating similar large orders or similar large contracts? And what is the potential for that?
See, oil marketing companies run on RFP. So as and when they come up, definitely we will be bidding for them. I think that makes it very, very relevant. Having said that, we are also bidding for large contracts with banks. I think banks also are a big channel for us for distributing. For the payment solutions, we are working with large contracts globally as well. I think we work, for example, globally, we worked with Amadeus on almost 19 airlines. And we see that as a big scope for our issuance business. We are the largest prepaid card and a wallet processing company in India, which almost has about 80% plus market share. And we see a lot of use cases for some of these large contracts. So I think we are in the play for a lot of large contracts. We have just recently won large orders, even from the US market with Miniso and the Google Waymo driverless card. So I think winning large contracts and winning it big, both in India and international markets, for some of the examples I've given you, is very much on the play for us. And that contributes to the sustained growth rate that you're going to see.
Samir, thanks so much for taking the time. Pleasure speaking with you as always. And look forward to speaking to you really soon.
Thank you. Thank you, Alex. Thanks for having me on the show.
Our pleasure.